Checkmate. In the quest of dethroning the dollar, China might just have played its winning move. The entire gameplay was so quiet and unexpected that the US was left flabbergasted. Currently, the global geopolitical outlook is about some long time coming peace deal and some money moves, of course. But the US has been conveniently sidelined from its own kingdom of playing the peacemaker, and we're now living in a new world order. This is the story of how China broke the US dollar. If there's one thing that China does exceptionally well, it's to use its strategic position as a global trading partner. While it has shown some deep tendencies for strong-arming smaller economies for the One Belt, One Road initiative, it shows some restraint with major players. And when its strategic trading partners also happen to join the effort for de-dollarization, it does make things a tad bit easier. For years, China has targeted the dollar's position as the reserve currency. Especially in the aftermath of the 2008 financial meltdown, the Chinese Communist Party doubled its effort to make yuan the go-to currency for striking trade deals, and perhaps avoid a sanction or two. And Xi Jinping has landed his first remarkable victory in this long haul. Following the groundbreaking deal in February, China and its 10th largest trading partner, Brazil, will exclusively trade in yuan. This means that Brazil won't be using the US dollar for maintaining any sort of price stability for its commodities. All of the financial transactions will only be centered upon an exchange from yuan to Brazilian real, and vice versa. This deal changes everything. Historically, the Latin American states have found themselves in the complex, exploitative, and inescapable Washington Consensus. After the economic and debt crisis of the mid-1980s, states like Brazil have been caught up with Western free market financial institutions like the World Bank and the IMF. That meant Latin America was caught up into the dollar debt, and China just became their savior. It's also important to note that China is Brazil's biggest trading partner. And where we stand right now, Brasilia also happens to be the biggest Latin American economy. So the implication here is simple. If a major actor can go up against the years-old US hegemony, then what's stopping the others? It seems like that the Chinese-friendly world economies are gradually going to submerge in the spillover effect of this game-changing deal. By the looks of it, it has been a long time coming now. Here's why. In 2022, around 7.29 trillion yuan, or 1.15 trillion US dollars, were used to settle commodity trade deals from China and its financial institutions. This is a 37.3% increase from the year 2021. These simple but hardcore statistics tell us that the dollar and its assumed global positioning is faltering. Of course, this is not the first time that the US currency is in hot water. The world still remembers the turbulent spillover effects of the 2008 financial crisis starting from America. But then, there are also new important considerations such as the stability of the dollar in the post-pandemic world. The important question to ask here has everything to do with why the dollar operates as a reserve currency. The simple explanation here would be the liquid and sophisticated free markets of the US that are compatible with most financial instruments and institutions. To put it even more simply, countries look up to the US for its safe and stable investment options and the way it maintains price stability. Now, the problem is, such high praises for dollars mostly appear on paper now. Following the high rate of inflation and the adjusted interest rates during the COVID outbreak, many states were visibly distraught, and the trust that the dollar had built in the post-World War II world is fading away. More and more economies are looking to diversify their transaction options and are dismantling their reliance on a single currency for bilateral trade deals. Plus, they don't want their foreign exchange reserves to be maintained in dollars only. Their issue is actually a homegrown, quintessential US problem that can be described in two words: bank failures. Let's take a moment to guess the number of bank failures in the US in the past 22 years. 100? 200? Perhaps even 300? Well, unless your shot in the dark wasn't 563 bank failures, perhaps you're too optimistic about the stability of US financial institutions. Unlike the rest of the world, of course. These numbers don't look optimistic on the US resume. If it's looking to regain the confidence that many economies have lost in the dollar, Silicon Valley Bank's recent colossal disaster doesn't help at all. On top of everything, many countries are getting tired of the US abusing its power as the holder of reserved currency, and everything boils down to the regime of sanctions. So how do you even cushion the devastating blow of Western sanctions? Well, if you take a page from Russia's handbook, you solely don't work around the problem, you try to dismantle the system from within. One exclusive power that the US has exercised through its native reserve currency is to kickstart a sanctions regime as a hegemonic tool. It's simple. Once you dare cross the US, it will rally up the support of its European allies and restrict your financial transaction, accessibility to markets, and even threaten your trading partners. This is precisely why China and Russia have garnered support in their movement to move on from a toxic currency to a more friendly one. That's just a code word for making yuan the dominant mode of transaction for every deal Moscow makes. In a not-so-shocking turn of events, the friendly currency, aka the Chinese yuan, officially replaced the US dollar as the most traded currency in Putin's Russia. All things considered, the downfall of the US dollar is just dominoes cascading in a line. At the back end of the Chinese groundwork, the most powerful trigger came from the war in Ukraine. Russia's campaign in Kiev also brought a series of sanctions against the country's already faltering economy. As the Biden administration blocked Putin from carrying out any transaction in dollars, which happened to be the standard, Russia was left with limited options for trading partners. Of course, its knight in shining armor was China. Since then, Beijing vowed to intensify Shanghai Cooperation Organization's, or SCO's, effort to diversify its currency options. Both China and Russia head the organization, and its one important objective was always to make a roadmap for trading in local currencies and removing the dollar as the sole payment option for bilateral trading deals. Other SCO countries like Iran, Saudi Arabia, and India also wanted to follow suit. Who knew Putin's obsession with sanctions will take him one step closer to the epic downfall of the dollar? For the US, China's efforts were going in vain until it struck a deal with Brazil, and was also able to give Russia an avenue to surpass the US sanctions. Not only that, it just simply got rid of the fascination for dollars in the Putin regime. The rumor has it that Russians are now stacking up Chinese yuan in their secret money boxes. The glory days of the US dollar are officially over, and China is just getting started. Now, mobilizing SCO is one thing, but attacking the petrodollar is another. As far as oil production goes, all petroleum exporting states have adopted dollars as their uniform form of transaction in maintaining oil prices. Here's the thing though, petrodollars are the most important source of revenue for oil states, and this is exactly why the US has been able to maintain the dominance of its currency on a global level. After all, without oil trade, everything will fall apart in the blink of an eye. But now things are changing drastically. More and more petroleum states are aiming to move away from the dollar, and the leader of this groundbreaking movement is Saudi Arabia, with Iran coming in second. Yet this is just not a mere coincidence. Everything points to the newly founded role of China in the Middle East. Other than being a major oil buyer, Beijing wants to do something revolutionary in the region, bring peace, end turbulent wars, and of course expand the BRI. Its recent role of arbitrator brokered peace between the two unlikely parties on any negotiation table, Saudi Arabia and Iran, which also happen to own an insane amount of oil reserves. After decades of war-making, both countries are looking to rebuild diplomatic ties. The rebellion against the US dollar went up a notch when Saudi Arabia announced that it's considering to settle oil agreements in the Chinese yuan. When the ultimate goal is to sell your oil, America's tendency to weaponize dollars becomes a hassle. If the decisions go through, the dollar will rapidly lose its importance in the global oil market, perhaps ending the dominance of the petrodollar in the longer run. And this is how you break the dollar. Do you see the Chinese yuan becoming the next big currency? Let us know in the comments below and check out the next video.